What are we going to see here? The president's out with a headline off of Fox. He's looking for a revved up economy. Well, guys like you and America, will you deliver to the president a revved up economy?
A little bit, but not much. The prospects for a big thing out of the Trump administration have gone down a lot. But the economy is still on a slow and steady path like it's been on for 7 or 8 years. And if anything, it's picking up just a little bit as we get into 2017.
In our next block, I want to really focus on the animal spirit. I said make nominal GDP great again, and that thing. Let me go to the global franchise that Francine has in London here. Chair Yellen is central banker to the world. Is Donald Trump now politician to the world? Is his effect so much that it will affect all of global economy and global trade?
That's too much. I think that the dynamic right now in the market being bubbly, as is put, is that China's improving, Japan's improving, Europe's improving, and the U.S. is improving. And this started before Trump came along. So he's been given a nice little wind at his back.
All right, but Ed, give us a sense, why have the markets rallied so much?
Yeah.
So they thought it would have been a disaster when Donald Trump got elected, and then the day after he got elected, they rallied, and they really haven't stopped.
So Trump is a factor, but it's focused on so much that I think that we should look at a few other things. So first, growth has picked up a little bit globally, like I mentioned. And secondly, earnings are picking up. And thirdly, central banks like BOJ, ECB continue to pump like crazy. And policy rates are almost a record low. So those three factors, before you get to Trump, have been pushing the market up and continue to push the market up.
Right. So do you believe, Ed, that let's say that today when Donald Trump addresses Congress, there's a lack of detail, that he focuses on defense, but he doesn't really tell the American people and the markets how he will reflate the economy? Are we going to see a correction or not?
You could see a disappointment if he really disappoints. But so far, Trump has been able to sense when he needs to deliver and deliver something, whether it's a promise or phenomenal or whatever it might be. So I wouldn't go into this expecting it to be a disappointment. But one of the problems with the market is it's so high, and the valuations are high. And so, you could have a disappointment, but that's not my best guess.
I want to switch away from what you're not known for, but you do every day within the Evercore ISI work, and that is the linkage into the bond market. William Gross of Janus Capital would suggest we have financial repression, we have subdued real rates, we have savers flat on their back. You see it here, folks, with the Trump reflation. We've shown this a million times. I showed it on Facebook Live yesterday. Here's the election, here's the day after, here's the Trump enthusiasm, and there's this rollover. Do you just assume subdued negative rates out into the foreseeable future as Bill does?
No, I don't. But I think that chart's a great chart.
Thank you.
And
you can stay. Why is that a great chart? Tell our audience.
Well, because bond yields really speak. They have a message, and bond yields they got up to 260, and then they've come off, and so that indicates that from that vantage point, the economy's not taking off. It's just picking up a little bit. Mm-hmm. At the same time, the odds of Fed tightening, as you reported, have come from 25% to 50% in a couple of weeks. So the Fed...
Should the Fed raise rates, or should they, as Ellen Zentner and Morgan Stanley says, wait till September?
I think they should go. So the important thing is that the market thinks they should go. And this is, you said you were bored this morning. It is pretty calm out there. But an important thing that's happening is that the odds of Fed tightening have gone to 50%, and the stock market is still up. It's okay with it. Mm-hmm. So that's an important message for the Fed to say, okay, why don't you think about going in March?